Crocs earnings report last week pushed the stock 19% higher for the week. So finally, investors are getting a little bit of credit for buying a stock that I think is a really good value. Some decent news in the quarter. Not a lot of huge surprises, I don't think, but the market's reaction is telling us that they're expecting a little bit better 2025. Let's dig into what's going on at the Crocs brand and also HEYDUDE, because it's kind of tale of two cities with this company. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the presentation that management always gives each quarter and go down here to these financial results. You can see that they break this out into Crocs brand and HEYDUDE brand. And on the left is Crocs Inc. overall. So that's the company overall, 4% revenue growth to $990 million. But Crocs brand was really the driver of that, up 5% from a year ago. And you can see that a little over 3/4 of the business is the Crocs brand. So that's really should be the biggest focus. But the problem is HEYDUDE has been a drag on earnings for a few years now. Really, since they bought the company, that brand has not been doing particularly well. So the fact that it was flat versus last year was actually really positive. And adjusted gross margin, nearly 50%. Not the best results that we could expect from HEYDUDE, but not terrible either. So when you look at Q4 earnings of $2.52, that is really solid. As I'm recording right now, the price to earnings multiple on a trailing basis is only about 7. So I'll get to how management is returning cash to shareholders, and that's going to be a big piece of the investment picture. But let's dig a little bit more into that Crocs brand. And you can see that there's a couple of points of strength. One is the direct to consumer that was up 6%. The other thing is international, 14% growth internationally. It was actually the #1 footwear brand on the TikTok shop in December. So we'll see if that strength continues there. But the classic clog, so basically just the classic Croc shoe that you probably know and love, was a real point of strength. And also some of these kids brand, Bluey and Mickey and Friends, bringing in that younger audience. I know that that's something that I've seen with my kids. So we'll see if that continues in the future. That's really been a point of strength for a number of years for Crocs. HEYDUDE, pretty good quarter, $228 million in revenue. I'll get to the guidance in just a second. That's where things kind of fell off a little bit. But direct to consumer was up 7%, wholesale down 8%. This is something that we're going to have to look at going forward. Those wholesale partnerships, when a brand's not doing particularly well, it's not surprising to see that some of those wholesale numbers are going to be a little bit weaker. Management went through a period where they were actually cutting off some of their wholesale relationships. So shifting things a little bit to a smaller number of distributors. That's part of the decline that we see here. So we do want to see this strength in direct to consumer. That's going to be a little bit more predictable. You're going to have a little bit more control over inventory and pricing, things like that. Average sale price was actually up 7% in the fourth quarter. So that's a positive point for Crocs, or at least the HEYDUDE brand. Not a brand that's had a lot of pricing power in the near recently. And then when you look at the full year, Crocs brand was actually up 10% and HEYDUDE was down 13%. So this is where you see the tale of two cities. HEYDUDE really, really struggling, Crocs brand doing much better. But I want to go to their guidance numbers because this is where the story changes just a bit from what you saw in the most recent quarter. Management is expecting for the next quarter, first quarter 2025, basically flat to maybe slightly down revenue for Crocs, and then HEYDUDE down 14 to 16%. For the full year, Crocs expected to grow a little bit. HEYDUDE expected to decline 7 to 9%. So you add all that up, they're expecting 2 to 2.5% revenue growth for the full year. Now, I will say that based on the comments in the conference call, it does seem like management's being pretty conservative with the HEYDUDE brand. They think they have some things that are working pretty well, things with it, like the TikTok shop. Their direct to consumer is going really well. They've got some interesting partnerships, so we'll see if some of those kick off, but they're still expecting that decline, and a lot of that's going to come from wholesale. So this is where it's very possible that there's a solid outperformance. I'm not predicting that they're going to grow in 2025, the HEYDUDE brand, but probably we'll get a little bit closer to growth in 2025 than we were in 2024. If that's the case, and you start to tick up the entire business's revenue to 3, 4, 5%, that's where you have some real upside given the valuation in the stock. But I'll get to that value in just a second. Here's a bit of a preview. You can see that total adjusted earnings per share guidance for 2025, $12.70 to $13.15. As I'm recording, shares are trading for $108.43. So that price to earnings multiple well under 10. That's exactly what you want to see, especially when management is returning capital in a pretty aggressive way, paying down debt, repurchasing shares, increased that share buyback to $1.3 billion. And look at these borrowings. This is the long-term borrowing. So at the end of the quarter, $1.35 billion worth of debt. At the beginning of the year, that was almost $300 million higher. They're also buying back shares fairly aggressively. I think they're probably going to get a little bit more aggressive with that in the near future. This is a weighted average shares outstanding. So maybe look at this as a little bit better. 58 million shares outstanding. There were 61 million shares outstanding a year ago. So not a massive reduction in the number of shares, but they've been focusing on that, reducing that leverage, reducing debt on the balance sheet. So putting off buying back shares, that's something with that $1.3 billion worth of buybacks that's already authorized. That's something they can do much more of in 2025.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Let's get to some of the valuation metrics, because I think this is ultimately what's most important. If this is a brand that can grow even just a little bit in 2025, and you see a little bit of a turnaround in the HEYDUDE brand, I look at the Crocs brand is really a foundation, and the upside for investors is going to be HEYDUDE if there is some sort of turnaround in the near future. But in the meantime, this is what the debt picture looks like. That is the column here in blue. You can see that they've been reducing debt at a really rapid rate. Free cash flow at the same period of time has been increasing, getting close to about $1 billion per year. And the weighted shares outstanding declining. Like I said, I think that could be a little bit more aggressive, but they may end up doing that in 2025 if we continue to see the kind of cash flow that we're seeing and the market cap stays at about $6 billion. They don't need to pay down debt from where they currently are. Debt's at a pretty comfortable level, 1 to 1.5 times adjusted EBITDA. So it wouldn't be surprising to see buybacks exceed 10% of shares outstanding in 2025. That's the kind of momentum that I want to see as an investor. You want to see companies buying back stock when shares are trading at a real discount, at a real low price to earnings multiple. Right now, even on a forward basis, that price to earnings multiple is a little over 8. So that's a pretty attractive place to be buying back stock pretty aggressively. I would expect management to be doing that, especially if they see pretty solid numbers in 2025. So good quarter. I'm a little bit surprised that the stock is up as much as it was in trading, but this is what you want to see from Crocs. You want to see a brand that is slowly and surely growing. We're not going to see 20% growth out of Crocs, but if we can just see a few percentage points of growth each year, keep that cash flow coming in, and then start to see a turnaround in HEYDUDE. If that happens in 2025, this is a company that deserves a much higher multiple, but I'm happy to see management buy back stocks at this low multiple. That will provide even more fuel if the multiple expands in the future. So that's what I'm looking for from Crocs. But let me know what you think about this stock in 2025. One that I haven't added recently, but may in the next few months. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.